As we look at what to expect in the economy this week, there are too many mixed messages to determine long-term outlook. The word to best describe this transitionary period in economic terms is uncertainty. So we look into the weekly numbers to gain the best insights we can. Let's take a look at what to expect this week. Before we begin, remember to like this video and subscribe for more economic updates. Among the more notable economic data highlights of this week will be the release of several reports on the condition of the nation's housing market. First up is the Housing Market Index for November, issued by the National Association of Home Builders. Economists expect this month's index to come in at 42, 1 point less than October's measure and well below the metric's historical average of 52. Any reading under 50 indicates a majority of builders view market conditions as poor rather than good. The national average for a 30-year fixed mortgage had drifted down toward the 6% mark about 2 months ago, but has since reversed course and now once again sits at the doorstep of 7%. Next up, the Census Bureau will check in on Tuesday with its figures for housing starts in October. Economists project that new residential construction came in at a seasonally adjusted annual rate of 1.34 million last month, which would be about 20,000 less than in September. Housing starts have rebounded somewhat from a 4-year low of 1.23 million units reached in August, but remain modestly below their historical average of 1.43 million units. As in the case with builder confidence, elevated mortgage rates are viewed by analysts as the principal culprit behind lower housing start numbers. On Thursday, the National Association of Realtors will round out this week's housing market numbers, issuing its report on sales of existing homes in October. Economists expect to see that sales of previously owned homes were sold last month at a seasonally adjusted annual rate of 3.93 million, which would be about 100,000 more than the number sold in September. Nevertheless, sales of existing homes remain at their lowest level since the global financial crisis. Other data we'll be watching this week includes the Conference Board's leading economic index for October, which is set to come out on Thursday. After declining by half a percentage point in September, the LEI is expected to have dropped another 0.3 of a point last month. Any decline at all will mark the 30th time in the last 31 months that the LEI has fallen. Currently, the metric is at its lowest level in more than 8.5 years. Finally, it will be time once again this week for the latest measure of both the Flash Manufacturing and Services Purchasing Managers Indexes from the S&P Global. Flash PMIs are advanced estimates of the final numbers that come out at the end of each month. On Friday, S&P Global is expected to report a reading of 48 for its November Flash Manufacturing PMI, a half point below October's number and much deeper into contraction territory. It has been since July that manufacturing PMI has remained below the key level of 50 that distinguishes expansion from contraction in the sector. As for Flash Services PMI, which comes out the same day, that's projected to once again indicate expansion and land at 55, same as October. That's all for now. We're glad to be back with you. Make sure to join us again on Saturday when we tell you what actually happened in the economy this week. This is Devlin Steele for Augusta Precious Metals signing out.